It's Brian Preston, the money guy.
I want to kind of change gears and talk about, are there any behaviors that you can do, and Carter's already kind of given some thoughts on this, to ensure that you're using your credit cards in a financially healthy way. And this will, all my friends who hate credit cards, who are writing their hate letters right now, will at least like that we give these strategies to help you keep the rails up, to make sure you're in a good place. So the first thing is you talked about this, Carter, is that is to make sure that you don't spend money with money you don't have.
That's right.
I mean, that is the key part. I come from an accounting background, and I always talk about that the average consumer, when you have $16,000 of credit card debt, these things are more like a check kiting scheme. And if y'all don't know what a check kiting scheme is, that's when you really don't have the money to buy something. So you write a check, and then in the time that you're, that person, usually it takes a business 2 or 3 days. But this is back when you used to have floats.
Right.
2 to 3 days to take your check to the bank. You go and you deposit a check from another empty account.
Right. To
try to make this game where you're basically
just
frauding out of
money.
you're spending money you don't have, hoping that the timing works out for you, playing off of the float. Well, that's what people do with credit. They don't have the money, but instead of being disciplined and waiting to catch up to where their spending should be, they'll just do it on a hope and a prayer, and then the interest starts building. Because what's the interest rate on a credit card is like 14 to 22, 23%.
Even more than that sometimes, I think. I mean, it's a lot.
Compounding interest can be your best friend, or it can rip the rug out from underneath you if you're paying 14 to 24%. I mean, let's face it, that's horrible. Also, we talked about, you said you set some credit alerts. What do you do? Is that just through Mint, or do you do that through the credit card companies?
So most credit card companies, the Chase card, we can talk about that in a little while, but they will allow you to set up balance alerts. Okay. So anytime you hit 200, 300, 500, whatever that number is, you'll get a text, email to let you know where you are on that credit card, which is a great way to know, sometimes you purchase something that's $200 and you'll get hit, but it's worth the hassle and the annoyance of having that balance alert to keep you in check.
A lot of people, I made this mistake. I think the older I get, the more I'm willing to confess my mistakes, so you guys realize how mortal I am with my finances as well. I can remember when I was buying my second house, I had this crazy notion that if I lowered my credit limits on all my credit cards, that this would somehow look better to the credit agencies, because I was trying to push my credit score up.
Young Brian Preston must not have listened to that Money Guy episode.
I've gotten, you know what wisdom comes from? Experience. And that's the truth of the matter. So here's the problem though. So that's why I like Carter's suggestion of using the notifications. And now that we all have smartphones, you can have the text come directly to you so you know where you're on the spending limits. But is that you don't want to lower what the outstanding credit limit is on your credit cards, because that looks like from a debt utilization level.
Actually
when you lower your credit limit, now it looks like you're using more of your credit card. So if your limit is $10,000, but you think you're going to outsmart the system and lower it down to $5,000, so it looks like you have less debt out there to the mortgage company and the credit rating agencies. But you're keeping $2,000 a month on your credit card, or you're paying it off, and that's just your cycle to have $2,000. Now, think about that. You were at a 20% utilization, but now you're at 40%.
That's right,
that's a disaster waiting to happen. So just be careful using some of those strategies where you think, I'll take some credit off the table and that will be happy. And then another thing, I think a lot of people make the mistake. When I was looking at your credit score, Carter, you were crazy enough to kind of let me see. And by the way, it's really good. But we looked at Credit Karma. The only red you have was how long your credit was. And they're going to haunt you with that for a long time. Credit card companies, they make you feel young for many years. But it is one of those things where you have to be careful shutting down that first credit card. My first credit card out of school was a Six Flags credit card. Because, that's what 23-year-olds need to be doing is going to theme parks.
That's right.
So I had a Six Flags. So as I got older, it probably didn't make sense to keep getting the Six, but I didn't close it. The cool thing, and we're going to get into brand loyalty in a minute. I'll tell you what we did at that point, but I did not close it. Because if you close that oldest credit card
It hurts.
It makes your time with credit look much smaller.
Sure.
So be very mindful.
And a lot of
that as well.
times, unused cards for so many years. So our college cards that we had, I got hit with that. And that's one of the reasons you saw my red mark was that it automatically
shut down.
closed. And they didn't even let me know.
Yep.
Because,
I had the
I've been
same
at
thing
5
happen.
addresses since then.
This is something I've never done, but when you and I talked about this, I was like, I ought to probably do that because I don't know how credit card companies set your due dates.
I think it's based on when you apply.
Is
Really,
it by,
I think like
it's
if you
not, they don't have this because I'm such a skeptic. I just assume they're like, man, when is this guy probably going to be the brokest so we can get some extra transaction fees out of him? Because it feels like to me sometimes, especially younger years where money wasn't exactly plentiful, it felt like they were trying to hit me when they knew I didn't have a paycheck coming. So what's some strategies if you don't like when your credit cards due?
So you can request that the credit card company move your due date for your credit card or your statement date. So if you're like me, we can talk about in a minute when we pay off our credit cards, you can get those dates manipulated potentially. They may or may not decline you that, but that allows you to, if you get paid on a certain day, bi-weekly, monthly, however that works, set it at a time where you will be flush enough with cash to be able to make that payment.
And we're all human, so we make mistakes. This wasn't in our show notes or prep talk. And you can only get away with this if you only make one mistake probably every year. If you get stuck with a late payment fee or an interest charge that you felt like because your payment came in 2 days after the due date, you can call and they'll usually wipe that stuff away. I mean, that's my experience.
Second best answer you get is no, so it doesn't hurt to ask.
So I throw that out there as just, it's not necessarily a safeguard, but there are some do-overs if you're a good customer because these people know, and you're going to talk about in a minute how you look at one brand and really are loyal to that brand. Those credit card companies know that is going on out there and they want to reward you. I mean, let's face it, these guys, when you think about, because I can't remember the number, maybe you do, Carter. It was on the same thing. If there's 1.6 billion credit cards, what was the revenue?
In 2006, which is the latest statistic I could find, they earned around $90 billion in interest.
So if you do the math on that, it worked out to be like $55 a card of revenue. Now, I'm a cashback guy, so I'm pulling money out. That shows that these guys are making lots of money off of some of these people paying 24% and so forth. So they have a little bit to give back. So you can call and ask and get those fees reimbursed.